Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, taking a look across the board here, another somewhat mixed day. We had the Dow down, S&P slightly positive, NASDAQ actually leading the charge here today to the upside, and the Russell slightly negative as well. We did see oil bounce on some crude inventories. Oil was actually looking a little weaker earlier on, as we'll see in the charts. Gold somewhat positive, bonds also catching a bid, something we've been noticing here over the last few sessions. And we'll take a look at this on all the charts, but as always, starting off our analysis with the S&P 500 dailies. So you can see here still, folks, we still have no real resolution above those 2300s. We did actually try and fill the gap down here just a little bit today, and in fact we'll go ahead and zoom in just a little bit. You can see we undercut these prior lows just by a hair, the 2290s, before rallying back. One of the things that we had mentioned during the trading session, during our live trading room, is that how we were just saying, hey, exercise just a little bit of caution because we are right down on those levels, undercutting it just a little bit. Remember, those places that I'm looking for here are the 2290s, 2270s, 2260s, and then the 2230s, right? Those are all the different areas where buyers have stepped up and pushed prices higher. So if you ever come back down to them and undercut them and potentially close a session down below them, it could potentially be the first signs that buyers are kind of stepping away from this market. So you always want to watch kind of your foundational levels, the support levels down below, and then always, folks, if you're going to be breaking out, because we are in an uptrend, so again, trend is your friend. If you are going to be breaking out, we're going to be looking for extending those legs higher up above those 2300s. Now, as we move on to the Nasdaq here, we did notice that the Nasdaq still continuing that leadership, relative strength, still looking really good here. It tends to be kind of concentrated a little bit more in the bigger cap tech. That is what we're seeing. So some of these big cap techs have been recovering after some earnings flops. If we take just a quick look across the board, we can see that the Amazon is kind of creeping up just a little bit after that big gap down from earnings. The Alphabet or Google somewhat recovering just a little bit, coming off its 50-day average after kind of a reversal, a bearish engulfing reversal on earnings. Same thing with FB, Facebook, right, starting to get a little bit of a lift. So we saw some initial kind of a flop on earnings, but now they're starting to, right the ship, turn around and start to attack some of these highs, and we need to be aware of that because this seems to be where the leadership is coming from. It is in the bigger cap tech names. As we move over to the commodity space here, taking a look at the crude. So we were talking about the crude here, just backing and filling for the last several weeks here between the 51s and 54s. In fact, earlier last week we did try an attempt up at the 54s. That has failed. Then we came all the way back down to these 51s, and you can see on the oil inventories today, we had a little bit of a pop off those levels. And so again, folks, we're still no directional tell. It was looking a little bit weak there as we came into the Wednesday morning session, but as of the close of Wednesday and as we go into Thursday morning, we're going to be looking for, again, more directional tell, so either up above the 54s or down below the 51s to get some sort of a read on the crude. Let's move over to the bonds, because the bonds here are starting to break out above some of these prior resistance levels. So we've mentioned here how it's kind of strange and odd that in a rising inflationary environment, a rising rate environment, that we see the bonds prices going up. Usually that would be going the other way. It would be going down as yields go up. So this is a little bit odd, and this is why we just focus in on price and volume. While you could speculate, a million reasons why bonds should go down, the truth of the matter is for right now it's going up. And that should be a little bit of a tell, a heads up that maybe initial assumptions may be not totally correct, or maybe it may take a little bit longer for sort of this bond sell-off that everybody's been calling for to actually materialize. So, just again, same thing we do every day. We take each day one day at a time. We don't try and predict. We just notice how different securities or different assets or different market indices are behaving on a day-by-day basis. And then finally here, taking a look at the gold, also seeing that the gold is trying to test up into these 1250s. And we've mentioned here those 1250s could be another place for potential sellers to come in on the gold. We watched as gold did balance out near these 1200s, which were our prior support area that we needed to clear. So, folks, even though we had somewhat of a quiet equity day, somewhat of a mixed day, we had some really nice trades that came out of today. One of them was this MOMO. This was a great trade that came out right here. We took this one very early in the morning. Let me just show everyone how this trade unfolded, right? This MOMO, we took it right around these 2370s. This was a great trade, closed the day up at 2490s. Awesome, awesome trade. So breakouts are still working, and guess what, guys and gals? It's coming from the highest relative strength stocks breaking out of recognizable chart patterns on volume, right? Look at this. We've got this nice, beautiful cup with handle. Look at this volume on the breakout. So, folks, these are the types of trades we're looking for, and this is why equity investing is great. Is you can have a flat sideways market, but the individual equities that have great earnings are going to be under accumulation by these major funds, and that's going to cause these moves and these big breakouts. Here's another one that we had a nice trade on. TDOC is another one that was on our breakout list here today. This has been experiencing some pretty heavy volume over the last few weeks, and here's just another example, right? We had our buy stops here right above these 2090s, right in this region. This ripped up all the way to the 22.10s in that region, and it doesn't seem like a huge move. It's like a dollar move, but folks, on a $20 stock, that's almost like a 4 or 5% move. That's a big, big move on this TDOC. And here's another one, and again, this is why we focus in on leading relative strength stocks. Is this is a stock that broke out a couple of days back. We still have a small position in this. We're letting it turn into a runner, but here's just another, continuation of the breakout. Big volume over the last few days. This was up another 5% on the day. So again, folks, game plan always has been, always will be looking for the best relative strength stocks, breaking out of recognizable chart patterns and on volume. And folks, I'm just wishing you a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.